is it cheaper to build a house or is it cheaper to buy a house that's already built? I know a lot of people, especially right now, are thinking like, man, I'll just buy this piece of land. Prices are super expensive. I'll save $500,000 on this project and I'll have a lot of equity once it's done. Hi, everybody. This is Joseluiz Morales. Welcome back to the Morales Group Show. Today, we've got some very special guests. We've got Lora and Anish. They work at U.S. Bank. They are construction loan specialists and land specialists. They are loan officers. Today, they are going to be educating us on how to go about financing pieces of land and how to go about financing the construction costs as well involved. That way you guys can have some information if you've ever thought about maybe like building your dream home. So welcome to the show, Lora and Anish. How are you guys?
We're doing great. Thanks so much for having us on.
Yes, thank you. Thank you for having us.
So fun fact, it's actually the first time I ever have two people on at one time. So the first of many in the future. So I like to just get straight to the point. I'd like to get started by talking about the financing of land. So like, let's say somebody is considering building a home and they're taking a look at pieces of land. Do they have to buy those pieces of land or can they actually get a loan to finance that piece of land? And if they can get a loan, what does that typically look like?
So that's a great question because it's a big misconception out in the market is that there's no bank offering land loans or you have to go to hard money. So U.S. Bank, we do offer, it's called lot lending. Mm-hmm. Basic parameters are up to 10 acres. Mm-hmm. There are exceptions, we can look at it, but 10 acres up to 300,000, 80% loan to value. And then we can continue and do even higher amounts as well. That loan, it's a 30-year loan, 3-1 arm, fixed for 3 years, because really the bank wants you within 3 years to go get your plans, come back, do a construction loan that pays off the lot loan. Yeah.
Okay. So basically they give you a fixture for 3 years and then it becomes variable after that, or how does that?
It does. It will adjust every year after that. You can come back and refinance again. There's no balloon payment and there's no points with that product as well.
Okay. And I think it's important for people to understand because that is a big misconception. They think that they either have to go hard money or they have to go cash, and unfortunately because they're not talking to the right people or the right type of loan officer, essentially they might miss out on an opportunity. So I know not all loan officers do, but that's something that you guys specialize in, right? Awesome. Cool. So let's say that somebody is analyzing a piece of land. What does U.S. Bank typically look for? What do banks typically look for when they're financing pieces of land? I know that you said it's got to be within 10 acres. Does it have to have water already at the property? Does it have to have electrical? Does it have to have gas? How does that typically work?
So it's two ways. When we do an appraisal, it comes back and it tells us if it's an improved lot or an unimproved lot. Unimprovement means it doesn't have electricity or water. Improved means it has city water or county water and electricity up to the lot. So if it's unimproved, way out, no other homes around it, we lower the loan to value by 5%. And the person would have to pay that expense of getting, putting in a well or sewer and electricity.
Okay, so basically the loan to ratio goes down by 5% in that case. And then what is a typical loan to value ratio on a piece of land? Is that something like an FHA loan where you go 3.5%, or is it a little? You said 90%, right? Or
no, 20% down up to 300. It tiers. So the higher, like I'm closing one in Montecito right now. It's $1.5 million, and that borrower is putting 50% down. So larger lot loan prices, it's a higher down payment, but there's still a lot of things out there, less than 300 or 400,000, then that's 80% loan to value.
Okay, so essentially on a $300,000 loan, they can put $60,000 down.
Mm-hmm.
And are they making the payments from the beginning, meaning from the moment that they get the loan, or is there a period while they're getting their permits that there's no loan payment, or is there any special circumstances in that scenario?
So I think that's something we're going to have Anish talk about in a little bit when we go into construction. But when you have the lot loan, you're paying principal and interest the moment you close. You close today, you're in March, your first payment's in May, and you start making that principal and interest payment.
Perfect. Okay. So basically on the piece of land, you make the payments. On the construction loan, obviously we'll get into it with Anish. Now, Lora, obviously, I mean, you're involved in land deals almost every day. Are there certain tips or advice that you can give to potential home buyers when taking a look at pieces of land? I know that sometimes I get phone calls saying, "Oh my God, I saw a piece of land for $15,000. I can't believe it. I want to make an offer on it right now." And the first thing I think about is, okay, like, is it buildable? Is it not buildable? So are there are all pieces of land created equal, or are there certain things that a consumer should look for when considering building on a piece of, making an offer on a piece of land?
So you've got to, it's CSI. It's not crime scene. It's client scene investigation. You really got to investigate. There's not one person that's going to give you that answer, but you start with the listing agent. Has somebody already gotten permits, decided not to build? What's the history of the property? And then also call a contractor. Have them take a look at it to see if it's buildable. And you as the agent are going to help them discover if that's going to be a good property and a good fit for them as well.
I'm not as familiar with land as I am in obviously the residential field. Essentially in the residential field, obviously we do that every day. Are there certain types of inspections that somebody should go through? And obviously it's probably not a canned answer, but are there certain types of inspections, like a soil inspection or due diligence, that you would recommend for somebody in a land transaction?
That's again where you're going to go back to the listing agent who's most likely done their homework before they took on that property. But that's where you can go to the city or county and get some information as well. Because I mean, there are lots in this area that people have bought and then they turn around and sell in 3 to 4 years later because they find out they can't build on it or there is a soil issue. So you can see where people have gotten permits, what they've been able to do, and why did they not follow through. So you really do need to be more investigative, and I think a contractor is going to help you as well. But there's not one person that's going to be able to answer all those questions. The bank does the appraisal. We're going to see if it doesn't have county water, and if you're on a septic system, we're going to ask for something called a percolation test to ensure that property drains properly, right?
So essentially the bank would do certain due diligence themselves because they're financing on the property as well too, but it's still up to the buyer to do a lot of their own due diligence to make sure that the property meets the criteria. Will the bank ever lend on a property that maybe is not buildable? Does that ever happen? Or because I know like for residential, it's really hard for a bank to lend on a property that maybe has a lot of deferred maintenance if it's FHA loan. Will the bank ever lend on a property that is not buildable, or just because that monkey's on the buyer's back to do their due diligence, or does the bank do enough due diligence to kind of almost protect the buyer in a sense that the property should be buildable because it's getting getting financing from a bank?
I think the properties that I've closed loans on, and lot lending has really picked up in the last 2 to 3 years. I used to do one once a quarter, and I'm probably doing 2 to 3 a month now.
Yeah.
And I think they're pretty straightforward. Anish, have you come across any that have been out there that didn't make sense for someone to build on?
No, I wouldn't say, because I get into the process a little bit later. So I'm getting into it when plans and permits are in place. So I think for me, you've already gone through the city, you've already done your engineering, you've already done all your planning and permitting. So I think for me, I come in at a little bit later stage, so you already find out. But yeah, I would assume that could there be an could there be a lot out there that the bank lends on, but you come to find out that it's not really feasibly buildable. I'm sure that there have been those 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 times that has happened. But I think going back to what Laura was saying, that's why the clients really have to do their due diligence. Don't expect the bank, because it is still your money. You're still obligated on that mortgage, and so it is still a
Right.
recourse loan. So
So if there's a lot that was on, a gas station, a prior gas station, we're not going to lend on that. That's going to pop up during the appraisal
Uh-huh.
and title search. So typically when people are purchasing lots, they're not out in the middle of nowhere. They're still in a neighborhood, whether it's Santa Ynez, Montecito, Ventura. Some of them, a lot of them lately have been where there was a fire and they lost the home, but we will still, and the one thing I do tell the buyer is to make sure they can get homeowners insurance. We don't require homeowners insurance on the lots, but they don't want to buy that property, find out they're going to build and then they can't get homeowners insurance.
Because of the previous fire,
Mhm.
essentially,
Yeah.
on the
Right.
property.
Right.
Okay. And some of the issues that I could think of would be, obviously, the homeowners insurance would be one. Essentially, easements as well too. Like, for example, like if the property doesn't, like, I've seen pieces of land that are landlocked, meaning that you don't have access to. There's a front house and a back house, and for whatever reason, the easement wasn't recorded properly, and then the back piece of land doesn't have the right easement. So the only advice that I can give from a real estate perspective is do as much due diligence as you possibly can, because it's not as simple as, hey, I buy the piece of land, the city is automatically going to let me build my dream house on it. Or sometimes even people say, I'm going to buy this piece of land and place a mobile home on it. I'm just going to place a trailer on it. And there are restrictions as it relates to all that good stuff. A lot of people think that they can just buy the land and do whatever they want with it because it's their land, but there's a lot more restrictions to that. So what type of input do the pieces of when you finance lots? What are those, like traditional, like 2.5%, 3%, 4.5% to 8%, 8 to 10? What do those typically look like?
That's a pretty good range, 2.5% to 10%. So we're right in the middle there. Our lot loan is right around 5%, 4.75, 4.875. I think is the one that I just locked. It's not a home, it's a piece of land. So 4.875, and I have to say that's the same rate I've had for the past 2 to 3 years. Even though we've had the ups and downs in rates, it's different collateral. So it's been a pretty steady, close to 5%.
And how long do these escrows typically last, like for the financing?
Yeah, that's one of the other things. Everybody's like, oh, we're going to do a 45-day escrow. We can close in 30. The only thing is if it's unimproved and I got to make sure there's a percolation test, we might want to make, and I can't have a perk test that was done 8 years ago. It needs to be something a little more current. That's the only thing that might take a little bit longer, but they can easily close in 30.
30 days is doable.
Yeah.
As it relates to the appraisal, Laura, are there any other tests that are on the appraisal report? I've seen an appraisal for obviously homes, and I've seen appraisals for multi-unit and commercial. I don't believe I've ever seen an appraisal for pieces of land. Is it pretty similar as to the residential side, or how does it vary? Would you think?
So similar as in you get the picture of the front of the property, the back of the property, you get the comparables. And the one thing we need to see, because on our lot loans, it cannot have any structures. If it was a burned property and there's still a foundation, that's okay, but we cannot have any buildings or anything on the property, not a leftover mobile home, nothing on the property. But it's just it's a standard appraisal.
And then it's the percolation test. Do you ever see any other sorts of tests come up besides the percolation, or is that like pretty much like the main one that you would?
Yeah.
The percolation.
Well, what happens is the appraisal comes back and it states that they don't have the water, the city water or whatever, or that there is a septic on there. And that's when we have to request that percolation test.
Okay.
Yeah.
Awesome. Good. Is there ever a time where the buyer can't get like city utilities, like water or electricity or gas to the property at all?
When they can't?
Cannot.
Yeah. Yeah. If it's way out somewhere, they're going to have the expense to run that electricity and the cost of putting in a well. And that's where many people end up walking away when they think, oh, I found this beautiful piece of property. But when they look at the cost of a well, it's really expensive. So that's when it's usually better to find something that has access to water and electricity. Yeah.
Already built into it.
Yeah.
Okay, perfect. And then Anish, as we get into the construction side, so essentially you find the piece of land that you want, you get financing through Lora. Lora gets you that great loan on it. You start going through the permitting process, meaning getting your permits, getting approval from the city. At what point do you get involved in the transaction?
So I like to get in the transaction about 3 months from the time your architect or contractor anticipates receiving permits on the house, and then from there they're anticipating breaking ground. Since our loan process does take about, I would say realistically, about 3 months from beginning to end.
Okay.
So I try to time it for my clients so that they realize, okay, it's not, hey, it's going to get done in a couple weeks or a month or something like that, because it's like, they're used to a regular mortgage. This is a little bit more detail oriented. So, and it's a little bit longer approval process to go from beginning to end.
Okay, so essentially about 3 to 4 months before they get approval, you start basically the loan process. That way, do you try to time it that once they have approval, you almost have the construction loan ready to go? Or
Correct.
Is it 3 to 4 months after they get the approval, then at that point they can expect to get the financing for it?
I try to time it so that you get the permit and we're not too far, a few weeks out from then go ahead and closing the deal. Because as you get into rainy season, I know builders want to put down foundation or do other things before like the rainy season comes in, or if they're doing framing. So, there's a timing aspect of everything with your contractor. So they try to hit certain milestones by certain months. So that's why we don't want to be too far of a lag compared to what your builder's anticipating.
Yeah. And then, and this goes back to Lora, like whenever you do an appraisal on the piece of land, do you guys factor in like the after repair value of the structure? Like meaning like, or not after repair value, but like the future value of the home? Or is that more on Anish's side once he actually gets the permits?
That's Anisha's side. They'll come back and they appraise the lot loan again. They appraise the plans, and then you have to get comps. You work with a realtor to get comps of what the end product's going to look like. And I should probably let Anish talk about this a bit more. But you can't build a 1,400 square foot home in a neighborhood that's got 6,000 to 7,000 square feet home.
Mm-hmm.
So you need a good comparable, and vice versa. It needs to be comparable to the neighborhood. Anish, you want to add more on that?
No, I think you kind of went over the gist of it. Yeah.
Okay, so essentially, once it gets to your part, essentially they do another appraisal, but then they take into consideration basically what structure, because by that time you have the plans already and you're able to kind of see, okay, this is what the finished product should look like and this is what it should sell for. So at what point does the lot loan get paid off? Does that get paid off at the same time when your loan closes, or how does that work, Anish?
Correct. So, once you have the lot loan, then we go back and we take a look at the construction loan. So our construction loans are single close construction loans. So we do have to be in first position, which means we do pay off any loans that happen to be on the lot, including our own lot loan if it's on there. So, let's use round quick numbers, is that you had a $500,000 lot and $500,000 in construction costs. So your total all-in expense is going to be $1 million, $500,000 to buy the lot, $500,000 to build. But, in Laura's case, let's say you had a $300,000 mortgage, then we would go up to 80% of that total value with the 500 plus the 500, the $1 million. So that'll give you $800,000 in terms of your brand new mortgage. So that's the new mortgage that's going to go on to the house. Of that 800,000, 300 of it goes straight to pay off the bank. And in this case, it would be US Bank. And then the remaining balance would be used for the construction of the house.
For the construction. Okay. And then that gets obviously dispersed. Now, let me ask you this. I know this is probably not your guys' area of specialty, but like from the time somebody gets the lot loan to the time where they're getting the construction loan, are you guys seeing like a 1 year turnaround, a 2 year turnaround, a 3 year turnaround? I'm imagining it's probably in that 3 year window since it's that that ARM loan, the 3 year ARM loan. Is there kind of like a certain time frame that you guys see? And I know that it probably varies by city as well too. I know some cities are faster than others, but what would you say a typical turnaround time? Because I get these clients thinking that they're going to build on a house. They buy the piece of land today and they're going to start building tomorrow. And sometimes it's just not realistic, you know? What would you say?
You nailed it in the beginning though. It's location, location, location. If you're on the coast, you have to deal with the coastal commission. Add in at least an extra year there. I mean, I've seen some clients go 5-6 years, try to get permits in Malibu. But other places I've seen 6 to 8 months, they've gotten their permits because, you know, the city that they're in is a little bit more friendly. I would say in Los Angeles, I would anticipate a year if you're not near the water and you're in an area or community that's a little bit more, there's more housing development going on. So, you know, if you're off a little bit further away, yes, that could take a little bit of time, a little bit longer than a year. Or if it's, you know, in a more natural, like where all other single family homes are, then I would say about a year is what I would anticipate.
Yeah. It's interesting that you say 5 to 6 years, and it does depend on the city, because I was doing a project in Oxnard and it took 3 years. And sometimes you talk to the city and they're like, oh yeah, we'll work with you. We'll make this fast. So what I'd probably recommend is talk to some of the people that are actually doing business in town, like construction people, architects, and get their honest opinion as to how long it's going to take in that city. Because sometimes we get investors from out of the area that they're getting permits in LA in a year. They come down to Camarillo or they come down to Oxnard and they're waiting 3 years and they get frustrated with the process just because they're used to how their ordinances work. I wanted to ask you, okay, so let's say that we get the lot.
I do want to add one thing to that, one caveat to that, is that we actually can do a purchase construction. Don't do them very often, haven't done one since I was in San Diego, but when somebody goes to sell the lot, they have the plans and it's ready to go, and they have a contractor. We've got the material list. We actually can do a purchase construction. The thing I have to say on that, that is not a 45-day close. That can take, the last one I did was over 4 months. So, but that is an option. If somebody they want to sell the lot and they've got all their permits and the plans, it's something we can look to do.
So does that mean that the seller has everything ready to go? They find an end buyer that wants to buy it. You guys finance without the finished product being built. And then basically the buyer gets to choose his own finishes on the house. Obviously not the floor plan or anything like that, because that's already set in place. And then you guys finance that and it takes about 4 months. Is that kind of the way that it works?
I can't say a specific time period, and I really want to hear also what Anish has to say on this, but I got one today. They called, they already have the permits and the plans, and I said, well, we really need to talk to the realtors, because I need to know that the realtors are going to be patient for this as well, because they still have to find a contractor. They have to, just because you have the permits and plans, you still have to bid it out, have a contractor that's ready and available. So Anish, anything you want to add?
Yeah, I mean, I think where Laura is going with it, you're seeing either twofold. One, you're seeing investors that buy lots and go through the permitting process, and then they determine, you know what, I want to get out of here. I don't want to build it. And then, so you have the plans and permits available, and, you know, someone that doesn't want to deal with the planning and permit, like you said, could take 2-3 years to get. You know, as you go through that process, the value of that lot, of course, increases as you have plans and permits in place. So for some people, they just don't want to build. They're like, they realize, what, I already went through this. It was a headache. I just want to get rid of it and be done with it. You have others that are investors and then they want to sell it. So it's what we call ready to RTI. It's basically ready to shovel. So you have to have plans and permits in place. It cannot, you can't make any alterations to those plan or permits. And if you do, then we have to wait for those alterations to be finalized. But yes, if you find a lot that has approved plans and you're like, that's exactly the type of house I want to build, then yes, going back to what Lora said, we have to have patient realtors and sellers, but most people would understand in a case like that.
Sounds like a great product, essentially, for the right type of situation, and it sounds like a win-win for everybody. Let's go back to the construction loan happens. Let's say somebody starts building their dream home. Do you guys disperse? Let's go back to that example of 500,000. Do you guys disperse all 500,000 at once, or do you guys so in the stages?
No. So yeah, that could be probably a very big misconception. So we use what we call a fund control company. So as a bank, we actually fund that entire 500,000 in this case to an escrow company. In essence, it's like an escrow company. It's called fund control. So, but state of California might be easier to think of it as an escrow company. They handle all distributions through the builder. So everything is done through the builder, not the borrower. So that's why vetting the builder is extremely important. We have to make sure that there's no history of lawsuits. They know what they're doing, because in essence, all the funds go to that particular company. So what we do is generally it's a monthly draw. So while you go through the construction loan, we have two really what I call the Bibles. It's our descriptions of material. So it's going to be the descriptions of what you're going to put onto the house. Mm-hmm. And then it's going to be the cost breakdown. So it's breaking down how much are doors, how much are windows, how much is flooring, how much is X, Y, and Z, all the little nuances. Those two things end up being our Bible and really the Bible for the escrow company, because then what they'll do is they'll look at the sheet and say, okay, you want $20,000 for the doors. Okay. And then they look at the sheet and make sure it corresponds. And then you can get 50% of the materials you can get up front. So as you go to order, you can get 50% of that. So let's say it's $20,000 for doors, you can get $10,000 right away. And most good builders have lines of credit or whatever it is with those companies. So, they're usually okay with taking the 50%, and then the remaining balance gets paid out as the door is actually on the house. So, and then we have an inspector generally go out once a month, and it's usually called we don't have them go out on their own. We have it waited until the builder decides to ask for a draw request. And then from there, it takes about 48 to 72 hours to get him out there, and then another 48 hours to get the wire out to the builder.
So essentially it's a process. It gets given out in stages as the contractor completes. I would imagine as important as having a seasoned loan officer that can guide you through this, probably one of the most important things is having a contractor that has worked through this process as well too, and somebody that's extremely reliable, because I've heard some stories, some contractors that sometimes it's almost like you're pulling teeth to get them to complete the project. Do you have any tips or advice on maybe like a platform that somebody can look for good contractors, or where should somebody go to the city, ask them for referrals? What would you say the best way to kind of vet a contractor, or how do you even know if a contractor, are there any signs of a bad contractor that people should look out for?
That's a harder question for me to answer, since I'm not really on that side of the equation. What I tell most people is, what I recommend to them is look for the type of house you want to build. Most, if you go around neighborhoods or wherever, you'll see signage, right? It's, X and Y, Z architects or builders or contractors. So their signage is always going to be out there. So if you see either a house that was recently, it's like a referral, right? It's, to me, I would.
Yeah.
was the builder, how was your contractor in this case? Because I like the house that, from the outside, I like the house that was built. This is something similar I want to build, and kind of go from there. Experience is really important, and use Google. Like, to me, it's like if I were in someone else's shoes, I always use Google to make sure there's no litigation, there's no bankruptcies, there's no issues, that at least I could see. As much as I could vet it is, try to use Google and then just ask referrals and references in essence.
Yeah.
I think the other thing to add to that is find out how many homes they're doing right now. You don't want a contractor that's got 5 girlfriends. You want to be the main squeeze on that one. You want most of their attention. It's true. You don't want somebody that's spread too thin and they're sending a bunch of employees out and they're only coming to see you once a week. And if you're okay with that, great. But I mean, it's just something to know up front, how many jobs you're going to be working on when you're on mine. The other thing to add to that is we do not do owner builder. We do get that request quite a bit. We don't do owner builder.
So that means that the owner is the contractor essentially for the house. And then essentially, are there lenders that do owner builder, and that's just something that US Bank doesn't do? Are there other lenders that potentially do that?
I heard that went away after the mortgage meltdown. I'm not aware of any other. There's not that many other banks out there doing construction, and the ones that are doing construction, like in my area, they don't do owner builder as well.
Yeah. That's good to know. What would you say the typical, Anish, this is for you, what would you say the typical timeline for a construction property is? Or obviously it depends on the size, but from the times they get the permits, how long are these people typically taking? I would imagine it also varies on the contractor. Are they looking at about a year, 2 years, 3 years, 4 years?
Yeah, again, going back to, there's the rule and exception. So I think the median, the majority of homes, you probably are running between 12 to 18 months. You definitely have others that go way, way, way beyond that, especially bigger estates. But I would say when someone comes to me and thinks it's going to be less than a year, I kind of giggle a little bit, because I'm just like, you're being sold something that's just probably not true. Everyone, that's the biggest kind of issue that I've seen in construction loans, is that too many people believe the gospel that maybe the contractor architect will tell you. And it's the one thing that I've always seen in construction loans, it's always over budget and it's always longer than you anticipate. So I tell everyone, make sure you understand that if they tell you 12, add an extra 3-4 months to that. And it might be even longer than that. I have people now that are telling me, oh my God, it's taking me 6 extra months than what I anticipated. And it's just, I've never heard someone come in before, it's like if they said it's going to be a year, they did in 8 months. Never, to a construction.
Yeah, so that's been my experience as well too, Anish, that at least when dealing with city contractors, architects, it typically takes longer than expected.
Mm-hmm.
And people are overly optimistic, like, hey, look, I'm going to buy this today. So what I hear you saying is typically you're probably, if you're going to get involved in something like this, you should probably expect a minimum of a 2 to 3 year process from start to finish. Obviously, we can't give timelines, and maybe even more. So just imagine 2021, you're probably looking at 2023 to 2024 to have the house actually completed. What I was going to ask you is, in regards to the payments during the construction loan, do the payments begin immediately on the construction loan, or do those ever get postponed for a period of a year or 2 years? How does that typically work?
So technically, yes, you just like any other mortgage, you owe it every single month. During the course of construction, it'll be interest only. And then after the house is completed, it converts automatically to principal and interest. Okay. Where that could change, and maybe what you're maybe alluding to, is that if there's what we call enough loan to value, or loan, total cost of project, is you have enough equity in the lot, because sometimes people own lots for 5 or 10 years and then the values just massively increase over that time period. If there's enough equity in your project, then we have an option called interest reserve account. So we'll anticipate how much interest you will accumulate during the course of construction. And there'll be a fund that we build in there where the payments are taken out of there. So in essence, you're borrowing the money to borrow for the mortgage, but you just have to have enough equity in the property.
That makes sense. So somebody either got a really good deal on a piece of land or has just owned it and the marketplace is appreciating.
Oh, correct. And the one thing that I want to bring into everything, which we do upgrades. So we do remodels. So if someone's buying a house, let's say they love this house, but they want to tear it down, or they want to add a second story. So, that's something that I'm seeing a lot more of, is either people that are just looking, they see a vision with a house. It's a little bit older. They want to redo the kitchen and add a second story. And so we do remodel loans too. It's similar. It's a construction loan, but we just call it a remodel. So in a lot of those cases, you're seeing that as well, where there's someone living in a house already or something along those lines. So, but yeah, there are options for remodels, or if you're looking to buy a house and you're just like, hey, this house would be perfect, but I need a little bit bigger size. Well, we can come in, you buy the house, get your plans and permits, and we can give you that second story on that ranch house or whatever have you.
And how would that work? Because let's say that they do buy that house, but that house, they have a first loan on it already. Essentially, you guys would be offering like a construction or renovation loan, but essentially take the place of the first loan. So it would have to have enough equity after the finished product would have to be worth more to be able to make it worth it. Am I kind of understanding correctly?
Sort of. So let's just use another example of, now that you have a turnkey house that's a little bit beat up, let's say, and let's say they go to you and they buy for $1 million, but for $1 million, okay? And then they take 6 months plus to go ahead and they want to build a second story to that, right? So all of a sudden, that house, you're keeping the structure of the house, right? You're just adding maybe you're just redoing the kitchen and adding a second story. Well, we'll use whatever the anticipated new value would be on that new house, right? With the second story, you probably add in, let's use $1.7 million or $1.8 million, right? At that point. So then we'll give you 70 to 80% of that new value of $1.7 million, $1.8 million. So there's enough equity there to give you your construction loan and still pay off a previous loan that Lora gave to you.
Yeah. Do you guys, for these type of products, if somebody wanted to do like a second home on the same lot, or even the famous accessory dwelling units now, you guys do any, is that classify under a construction loan or a renovation loan at all? Or do you guys get involved in that at all?
So we won't do a second home. We'll do a new construction for a second home, but we won't do just an ADU unit or just another. It would have to be a much bigger project. We won't just do an ADU unit only.
Okay. So
yeah, and the other thing is, when the remodel or rehab loan, I just got a call on one this week and they're talking 150,000 or so. It doesn't make sense. It usually needs to be like 250,000 or more. In that case, they can come and do a home equity loan. We actually go up to 85% loan to value, just put a home equity on there, do that rehab, refresh, and be done.
And very
and
simple
keep there
too. Like the home equity line of credit is very simple loan product. I actually have one with you guys. And it's been great because it's like a debit card. If I need it, I use it. I can put it back whenever I want. I don't get charged if I don't need it. So it's a great product that you guys have. Now, are these construction loans, once they're done, like let's say once the project is done, do you have to refinance and get a regular loan, or does it just automatically translate into like a 30-year fixed loan after that?
So yeah, we really have two main products. It's a 30-year fixed, as you just mentioned, and we have a 10-year fixed ARM, but it's a 30-year mortgage. Those are probably our two main products. Right now, I would say the most popular is our 30-year fixed. just to give you a sense, our rates on 30-year fixes, you're probably around 3.7, 3.8 today, which is for a construction loan is extremely attractive. So, and the great thing with our construction loan is that there are no prepayment penalties after you're done with the construction. So, so let's just say you do finish the house, you build it, and it's done. You get to look at, is our rates better today or not? And in some cases, in today's market, yes, rates have been lower than maybe 2 years ago, but maybe 2 years from now, they'll be a lot higher than where they are today. So you're at least know for the next 29 years, you're locked into this phenomenal rate. And if it, for whatever reason, it goes below that, you're more than welcome to refinance.
That's awesome. That's good to hear. Okay. Now, is it cheaper to build a house or is it cheaper to buy a house that's already built? I know a lot of people, especially right now, are thinking like, man, I'll just buy this piece of land. Prices are super expensive. I'll save $500,000 on this project and I'll have a lot of equity once it's done.
So, I mean, technically, yeah, it would be cheaper to build a house, technically. But where the caveats come in, because if it's not cheaper to build a house, then there would be no builders, right? So it goes all the way back to experience, knowledge, cost overruns. There's all those factors and time. Everyone values their time. So a lot of people that I talk to that build the homes for themselves, they say it's a second job, right? So do you want to dedicate the time, the money, and the energy to build a house? For some people, it is worth it because they can build exactly what they want, and there should be some built-in equity into that house, but it's not for everyone. I mean, I think the people that think the way, that may have talked to you, they think it's a lot easier and, I'll just pay this guy to do everything. I think as you start away from that project and you're not there every day, then honestly, it will be more expensive than buying a house turnkey. It's where it becomes more cost efficient is if you really are on top of it, like it is your job. Then yes, but again, you have to factor in your time as well.
What I hear you saying is it could go really well if you're on it and if you have some experience doing it and if you're kind of managing the project, but if you are not that hands off and you think you could just hand it off to somebody else and that they're going to finish your dream home for you, it could lead to something that maybe isn't as good. Okay. And then how do people estimate? I mean, in your appraisal process, is the cost of the construction estimated directly from having a bid from the contractor? Or is that something that the contractor estimates like a certain price per square foot, like a rule of thumb or something like that?
So kind of going back to what I originally said, that are two Bibles. It's the description of materials and the cost breakdown. Those two items, along with the plans, are what the appraiser needs to value that house. Because you could build a 2,000 square foot house and cheaply or very expensively, right? I mean, depending on the location. So it depends. Are you getting the cheapest fridge, the most expensive fridge, the cheapest flooring, laminates, or are you getting like the most expensive flooring? And all that plays a role into the quality of the build and the house. So yeah, what's critical is really that descriptions of material and the cost breakdown. And that's what the appraiser is going to look at is they're going to make sure, are you building to the quality that's in the neighborhood? You're not going to put a manufactured home in Beverly Hills, let's say, right? So are you matching the quality of build within that neighborhood? So that's what an appraiser is going to look at. And that's going to be the key to the valuation. And no, they don't comp it by price per square foot. No, they do it by just comparables. What houses have been built recently that have been sold? And then what have those gone for? And that's really where the appraiser comes in at. And is it the same square footage, similar square footage, I should say, or similar build style as in Mediterranean, Spanish, etc., modern?
Who prepares the Bible, the Bible list? Is that the contractor or is that just like a
contractor would, well, it's going to be generally it's a contractor, but of course with the borrower, right? Because contractor can put in a $2 million budget. It's of course like the borrower or the client's going to look at and talk to the contractor and be like, I want a house for around this much. And then there's a lot, and that's why it's so time consuming, because everything has to be exact. And there's a lot of back and forth, right? So there's a lot of back and forth with the builder and the clients when they figure out the pricing of certain things, because they do go look at fixtures, they do look at things because they want a very good sense of what is it going to cost. Because, and this is another very large takeaway, and this is the thing that I've seen happen a lot more than I wish I didn't see, is you cannot get money once you're under construction. So once you start building, you're in it for a year. Sometimes like I said earlier, there's a lot of cost overruns. You can't come to the bank again and ask for more money. You either have to come out of pocket, go to a hard money lender, or, you're kind of in rough waters. So that is critically important, as I tell every single client. Anticipate. It's going to go over budget. So that's why having these numbers, being as close as to those numbers as you can get, is the best. And also having cash on the sidelines, just in case there are cost overruns, or having access to cash is going to be critically important when you're looking at a construction loan.
Yeah, I agree with you 100%. And then obviously just having a contractor that has built homes, because there are contractors that do remodels and there are contractors that do ground up construction. Differentiating, because it's almost like the one that does the ground up construction is going to be able to help anticipate certain things versus the guy that just does remodel. He's going to be more familiar with the process. He's going to be more familiar with things that could come up, things that could go wrong, and having that expertise, I would probably say, is probably worth paying a little bit extra. Sometimes people go after the cheapest contractor, and that can oftentimes be a mistake, because that cheaper contractor doesn't have the experience in the new construction. To ask you guys, what about COVID? Has COVID affected construction lot loans at all? Have the ratios changed at all? Has the process as the construction loans changed at all because of COVID? Has it made the process slower, faster? Anything that we should be aware of due to COVID?
Honestly, no. Luckily, I think we still are we're very aggressive. I've heard, I think Lora is laughing. We've seen other companies and other banks stop doing construction loans. We've stuck with it through these times. I mean, we are a very top 5 bank in the nation. So we have a lot of, muscle and financial muscle behind us. So it's a very competitive product for us. And so we're very committed to it. But yes, during COVID, we haven't really been affected on the construction side.
I think with the lack of inventory in the market, a lot of people are looking at purchasing lots. My lot loans have increased quite a bit over the last few years. The one thing, and just want to really make sure that we're clear on as far as our construction loan, it's a one-time close. So once you're finished with construction, you don't have to come back and reapply. It rolls into that permanent loan. And I think that's such a good product, because in 2008, in the mortgage meltdown, there were people that finished construction and could not get a permanent loan. So peace of mind, and like an insurance, that what your rate is, 3.75, great. You finish 18 months from now, rates are lower, sure, refi. If not, you're locked in under 4%. It's a great product.
100%, 100%. That peace of mind of just knowing that you have that already. Good. Is there anything that we missed or that you guys would like to add to the viewers out there?
One thing, this product is for our lot loan, and our construction product is for a primary residence or a second home. It's not for investor. So I think that's one point to share. Anish, do you have anything?
Oh yeah. Honestly, that was it. The investor piece is the biggest, and I would leave it. Once you get into construction loan, it's kind of what I said earlier. It's not as cheap as you think it's going to be. Make sure you have cash on the sidelines or access to it if there are cost overruns. So that's key.
And do you guys have any products for secondary properties or investment properties? Is that something that U.S. Bank does, or is that something that not at the moment?
Not for construction. I mean, we'll lend for second homes, investment property, but not for construction. Yeah.
Perfect. Okay, guys. Well, this was episode number 55. This was a highly requested episode, so I'm excited about completing this one. I want to thank both of you for being on the show. If someone would like to get a hold of you guys that is either interested in a land loan or a construction loan, what would be the best way for them to connect with you guys?
You can give me a call, 805-245-9678. And you could look us up at usbank.com. You can Google our names with US Bank, and either one of us should show up as well. We're happy to help.
Perfect. Yes. My cell phone, 310-482-1377. And yeah, we're here, happy to help.
Sounds good, guys. Thank you so much for being on the show.
Thank you for having us.
You're a great host. Thank you.